Michael, you first. Dow can't seem to hold 17K. Is it just that disappointing report about optimism and small business that we got this morning?
I don't think so. You know, Stuart, we talked about this 3 or 4 weeks ago. I said that the Dow would break through 17, and then I thought that we would see a pullback, and that's exactly what's happening. I think people need to keep looking at the long view. The economy overall is pretty healthy. We've had our best 5-month stretch of jobs since in 6 years. Home sales are still strong. Auto sales are running at almost 16.5 million units for the year. I'm really not worried. I think this is going to be a very short-term sell-off.
Okay, but that's interesting. So it's a blip. It's a short-term sell-off. Don't get worried. Don't panic. Stay in there. That's what Michael Robinson says?
Yes, definitely. Okay. Do not panic. Do not sell. Ride it out.
Got it. All right. Look, the Dow is now well below 17,000. So, Nicole, tell me, who are the biggest losers today?
Well, we're looking at Goldman Sachs, Boeing, Visa. They account for more than 40 points on the downside of the Dow Jones Industrial Average. You also have Nike, American Express as losers as well. Goldman Sachs is about 24 negative Dow points all by itself, down 2.2%. So you're seeing financials lower. There's just a few names that are trying to squeeze out the green, such as consumer-type related names. Those are the defensive plays. Procter & Gamble and Walmart are trying to squeeze out the gains, but the overall market is down this week, down today, and the down volume easily outpacing the up volume here. It's just one of those risk off, and the VIX is higher today.
How about the technology losers? Because I know there's some big names that are way down there, Liz.
Yeah, that's right. Amazon, Yahoo, Netflix. Stuart, we're talking about stocks. Very rich multiples, a lot of rainbow and sunshine and helium in the valuations for these stocks. So it looks like there's a tech retreat going on, investors taking money off the table in these richly valued stocks.
Then we've got Walmart, the U.S. CEO there. He says the job market, yes, it is improving, but that's not helping Walmart sales. Mike, sounds like we are creating jobs, but too many of them are low paying, and that's stopping people really spending. Is that how it is, Mike Robinson?
Definitely for Walmart. They have too much of their installed customer bases in low income. It's almost 20% of the people are on some form of government assistance. This company is quietly moving into the e-commerce realm, where it's been pretty weak. 2 years ago, they hired a new e-commerce head who comes from CBS Interactive. They are going to spend roughly $500 million on e-commerce initiatives and probably hire close to 1,000 people in Silicon Valley. So Walmart has got to get out of its dependence on superstores, which are falling out of favor, smaller, better located stores, and they also really need to step up their e-commerce efforts, which they are starting to do now.
Well, it seems like the market likes it because the stock is up today in very much a down market.
And that's another thing. Here, I haven't seen today, yesterday, decliners led advancers almost 3 to 1. I don't know what the stats are for today, but it is up happily, on a pretty bad day for the market overall. Walmart's doing well.
All right. My producer says Olive Garden is an assault on his Italian heritage. Now, Liz, I don't know where this popped up from. Is the stock down or something?
The stock is sort of trending. Listen, I like
what?
It was popping up a little bit because they are long overdue for a makeover, down fractionally today. Darden Restaurants is finally doing a makeover for Olive Gardens. I like Olive Garden. You're talking to an Irish woman who has an Irish palate. I grew up with an Irish cookbook's about as thin as a Darden restaurant menu. So, but I like Olive Garden, and your producer's always making fun of me. But
it's a rotten chart.
Hey,
it's a rotten chart, but Olive Garden
makes
Olive Garden is 60% of Darden's sales. I didn't know that. That's an amazing stat that Olive Garden is 60% of Darden restaurant sales.
Nicole is exploding. What's up?
I said I like the salad bar. I mean, do you really go to Olive Garden for your mama's, baked ziti? Probably not. But it's, it does the trick. Fast food and a good salad bar.
They're doing a restaurant makeover, $40 million.
I think we really have covered Olive Garden to pieces, I think, right here. So let's move on. Bad news for Samsung. Now, this is interesting. They forecast a big drop in profits for the next quarter. Is this the Apple effect, Mike Robinson?
Yes, part of it is definitely, Stuart. That's an excellent point. It's his third straight quarter, and what worries me as an investor is Samsung's operating profits. And that's something you really want to look at. And you turn around and you look at, this is a company that still is the world leader in market share in terms of smartphones, but it fell 2 percentage points in the first quarter. But look at Apple. People have been criticizing it as being too dependent on the iPhone, when in fact it's making money hand over fist on the iPhone. in a way that really nobody else can. So Samsung has a slight market share advantage, but it's not translating into cash flow and, importantly, operating profits.
We hear it. All right, everybody. Thank you very much indeed for being part of the Real Halftime Report. Thank you all. We will see you again very soon.